Hello guys, welcome to Career Compass. This is Dipan Ghataliya, your tutor for ACCA, UK Tax and SBL paper. Let's start with the new chapter, which is the capital gain tax. Students, here we will see the basics of the CGT only, and we will see that how to calculate the CGT liability. The CGT will be charged on the capital gains arising from the chargeable disposal of the chargeable assets by the chargeable person. Student, the definition looks complex, but it's very simple that to levy the CGT, the person, assets and the disposal, all the three things must fulfill the definition of the chargeability. We all know what's the meaning of the person, but let's see who is the chargeable person. It's the UK resident individual, companies or business partners are a chargeable person. Then after, what's chargeable disposal? There are two types of the disposal, students. One is the on which CGT can be levied, and the other one is on which the CGT cannot be levied. That means the chargeable disposal and the exempt disposal. Here we have the list of the disposals which you have to remember compulsorily. So please go through it, and please also remember the exempt disposals also, because it's also important for the examination. Then after, student, the last thing is that chargeable asset. Once again, it includes all the assets irrespective of the location of the assets, but there are some, students, exempt assets which are totally out of the purview of the CGT, on which the CGT cannot be levied, students. So that's why both the lists are over here, you can see in the screen. So you have to properly remember all the things that you can see as in chargeable assets and the exempt asset. Specifically, we can say that exempt asset are more important. If you remember the exempt asset, the remaining assets are always become the chargeable assets. Then after, students, I always tells that if you are fulfilling all the three basic conditions, then we can say that we have to compulsorily prepare the CGT pro forma. It's not like that if you are preparing the pro forma, you compulsorily have to pay the tax. There are lots of possibilities where you are preparing the pro forma, but still you are not paying the tax. But right now, students, once you are done with all these three preconditions, the one thing that you have to mug up is that you compulsorily have to start preparing your pro forma. Now the CGT pro forma is very simple, students. Over here you can see in the screen. It's first of all the disposal proceeds, then all the costs related to disposal. Then after, you have to deduct the acquisition cost and like kind of extra improvement expenditure incurred will give you the figure of a chargeable gain. But students, this is the chargeable gain from only one property. Then after, if you have sold another properties, if you have multiple chargeable gains in the tax year, so you also have to have the figure of all the other pro formas also. Then once you have the chargeable gains, student, then after, from all the chargeable gains, you have to deduct your losses, capital losses of current year or brought forward. And then after, if you have any remaining gain, you can deduct the annual exempt amount. Now annual exempt amount, you can see here, is the 12,300. Now it's same concept just like we have seen in the income tax of personal allowance. Yes, just like the personal allowance, over here also, students, you will going to get a fixed amount of the deduction, and if you can utilize in the current year, you can utilize, you use it. But if you cannot, then the annual exempt amount will be wasted. It cannot be carried forward, just like personal allowance. Then, students, the other aspects also we have to consider over here, students. If you can see over here, the disposal proceeds, generally, students, the disposal proceeds will be taken up as an actual consideration. But if the parties are connected, that means if you are selling the asset to connected person, then in that situation, the disposal proceed will be the market value of the assets. And students, once again, if you can see over here in the acquisition cost, once again, if you have purchased your asset from the market or from unconnected person, then the acquisition cost will be the actual purchase cost. But if it's a kind of the gift, if you have received this asset as a gift, students, it should be the market value at the time of the gift, students. You have to remember these rules. You can see on the screen also, students. So, but you have to mug up this thing. And if the student's asset is inherited, then probate value at the time of death of the donor should be taken. So students, here we are done with this pro forma. Then after, students, the next topic is the capital loss. It's nothing but what if we have sold the asset at a loss, then students, it's called a capital loss. For current year's capital loss of any asset can be offset, can be set off, can be relieved against any other assets gain of current year. While setting off the loss in the current year, we have to make sure that it must be set off to the maximum possible extent. That means we cannot restrict our loss amount to just preserve our annual exempt amount, or we cannot just restrict it to avoid wasting the AE amount. Okay, and then after students, after offsetting in the current year with the current year gain, if still we are getting any kind of the losses, if there is a still remaining losses there, then that can be carried forward for the future years. But students, these loss which we will brought forward for the next year can be restricted to preserve the AEA. That means if you are carrying it forward over there is no rules for the maximum possible amount. You can deduct any loss you want in the future years. Then after, what if students, person have the capital loss in the year of the death? Then we can't carry it forward, so we have to set off that loss by carry it back in the previous 3 years on a LIFO basis. While carrying it back, we can restrict the amount to just preserve the AEA, students, that you have to remember. And as I told you that we are carrying it back, it's very obvious that we have to get the refund from the HMRC for that, right? Then after, students, we have the tax rates given over here. You can see on the screen. It will differ if the asset is a residential property and if it's normal kind of the asset, students. And another thing, students, which will impact our tax rate is that how much the unused basic rate band you are having. According to that, the tax rates will be applied. Either it can be 10% or 20%, 18 or 28%, depending on the asset. So basically, students, we are done with these tax rates also. The next concept is actually the stamp duty and stamp duty land tax, but for the fundamental level taxation, students, it's not in your syllabus. So right now we can say that here we are done with this chapter, students, but still if you have any query, feel free to ask me. So if you are liking this video, students, if you are liking this concept, subscribe to the channel and like this video. Thank you guys. See you. Bye.